questions. All right, Mr. President, you can go ahead and get it started.
Well, welcome everybody to the long-awaited 2020 State of the Industry Summit. I want to thank everybody for attending this morning. It looks like we have 67 plus participants, so excited to see everybody. I also want to thank our sponsors, James Hardie and StrucSure Home Warranty. Please do business with all of our members, and thanks especially to James Hardie and StrucSure Home Warranty for helping us today. Before we get started with the programming, I wanted to mention our September to Remember membership drive. We are asking all of our members to recruit at least one new member in the month of September. And to incentivize you, we have some pretty cool prizes. For the first member that you recruit, you get a free gallon of hand sanitizer. That's right, one free gallon of hand sanitizer. For every additional member you recruit, a $50 gift certificate. We're also competing in the Texas Association of Builders membership drive as well, for both a pride and a trophy for our area if we can recruit the most members. And NAHB is offering 3 times spike points this month. So for every member you recruit, you would get 3 spike points instead of the normal 1. So after the summit today, please take a little bit of time and call, text, or email at least 3 prospective members and ask them to join the Dallas Builders Association. You can send them to dallasbuilders.org. Click on membership and then click on join now. And if you have any questions or need any help on membership, Coleman Yates, our membership director, is available. We're posting his information on the chat so you can see his phone number and email address. And we look forward to seeing what we can do in this month to increase the membership of the DBA. And I appreciate everybody's help with that. So without further ado, I'd like to introduce our award-winning executive officer, Phil Crone. And with that, on with the show.
Thank you, Justin. Appreciate that. And thank you, everybody, for being a member of the Dallas Builders Association and for anything that you can do to help us grow. The one thing, and this kind of transitions into what I'm going to talk about with Lake right after we hear from one of our title partners. The one thing that we've learned over the last few months is that having a strong voice is incredibly important in terms of being able to keep our industry essential, keep everything operational. The response from all of you has just been magnificent. You know, I just wanted to make sure that we were able to keep you all in business, and that was up in the air back in March. But just really thrilled to get on with the program because we've got a number of challenges facing our industry. We've overcome some of those in March. We've responded really well, but there are some headwinds that we're working to overcome. But before we get into that, I'm going to share my screen and have a message from Tiffany Acree, who is one of the title partners for our event. So here's Tiffany.
Hello, and welcome to the 2020 State of the Industry Summit. I am honored to be the title partner of this year's event. It has been a crazy year, but I am thrilled how the housing industry has responded. Now more than ever, StrucSure Home Warranty is there for you, offering competitive rates and comprehensive coverage. We are honored to work with so many of you, and we are eager to create long and lasting relationships. Please call us, and let me give you some information on our coverage and products.
All right, great. Really appreciate Tiffany's support as well as James Hardie being our title partners here. Let's make the transition over, and Lake, you and I can probably go on forever talking about just the litany of challenges that we're dealing with. I want to kind of pick up with what I was talking about here a little bit ago, though, because everyone here owes you a thanks. You work behind the scenes. Not everybody gets a chance to know and appreciate the work that you do, but you were very helpful, along with many others at NAHB, leveraging a lot of our congressional delegation to ensure that Dallas County didn't shut down, that no other counties started shutting down in Texas, and then that we were most importantly able to get housing added to the Department of Homeland Security's critical infrastructure list, which of course then carried on shortly thereafter to the governor's first executive order. All that stuff was happening in real time. It was all happening over the weekend. It seems like a blur, but it definitely results in a resounding thank you from this group. So I know, the political situation in Washington has a number of different things that are worrisome to the industry right now as we kind of look ahead. Of course, we'll talk about the elections. We'll talk about where we are on lumber, which has just gone up astronomically. We're gonna talk to Paul Evans from BMC in a little bit about that too. But just let's kind of start out with the stimulus discussions, because you and I thought that this was going to be maybe a done deal back in the summer. Things have kind of lingered on. The economy, nonetheless, has kind of been a mixed bag with good things on Wall Street, some struggles on Main Street. So, just tell us kind of quickly where's Congress right now in terms of consideration on another stimulus package, and what's in it for us? What matters to us?
Sure. Great question, Phil, and thank you and your team. Those were very nice remarks at the outset about our involvement, but I'd say the real heroes are you and David and your team, and certainly those members of Congress that you alluded to, people like Lance Gooden and Michael McCall and others throughout the state that were, echoing into those authorities at the local level to keep construction essential. Where is Congress? Not in a very good place, to be honest with you, Phil. The Congress has worked thus far in producing several stimulus economic recovery type packages. On prior calls that I've been with you and your membership, we've talked about some of these bills. So I guess this is about the fourth stimulus bill that is out there that follows the CARES Act. What you asked, what's in it for us? Well, the Senate bill, we believe, could be voted on as early as next week. Now, when we use the word skinny, that's a non-legislative term for a scaled down bill, and what the House passed a month or so ago. It's a $1 trillion measure, again, compared to the House passed $3.4 trillion stimulus. What's in it for us? All right. Things that are important to us that are included in either the HEROES Act, which is the House bill, or the HEALS Act, which is the Senate bill, again, which we think could be considered as early as next week when the House and the Senate return to Washington. The 501c6, I know that's a very important issue for you and for the 700 other associations. We want to make sure that those associations have access to the PPP forgivable loans. We want spec builders, multifamily owners to be able to access the PPP loans, and land developers. So again, spec builders, multifamily property owners, and landowners to be able to secure those forgivable PPP loans as well. Something that is not in either bill is an extension of the low-income housing tax credit. At the moment, with the rates that the Fed has established below 4%, those investments look less attractive. We're pushing for a 4% minimum floor. There is an eviction moratorium. I know that the president has included that as one of his executive orders. We are working to make sure that there's rental assistance. There's a lot of talk about, protecting the tenants and protecting the property owners. What about the owners of those properties? That's of critical. Those are NAHB members, and that is of critical interest to our industry. How do we deal with rental assistance? The other two things, Phil, just in passing, workforce development. When we start to recover as we are, we're going to need the workers in the industry to be part and to assist in the recovery. We also need monies for state and local governments to continue to be able to continue with providing permits, to continue being able to do those inspections. So the state and local governments have to be involved and properly funded. So where we are, Phil, there's a Senate bill that we believe is a slimmed down, skinny version of what the House passed. That includes the C6. It does not include spec builders. It includes language on the eviction moratorium, but does not address rental assistance. Neither bill includes anything on the low-income housing tax credit. There is workforce development language in the House-passed HEROES Act, and monies for state and local government are in the House-passed bill. So a lot of work a lot of work to go for NAHB. Once the Senate passes, we believe, we're hopeful, the Senate will pass the bill next week, and then they'll proceed between the two passed bills in a conference type setting to work out the major differences between the two.
Yeah, I think some of the big things which you alluded to, really impactful for our members. It's frustrating that pre-existing SBA guidance that came before the pandemic and came before the need to get this money out to small businesses seemed to indicate, and some of the more diligent banks out there were really struggling with this language in terms of being able to get the PPP funding out to some of our builders that had a lot of land development or speculative homes that were being built. And therein lies the frustration that you had, this pre-existing policy that certainly ran right up against a crisis that required precisely the opposite. It required getting this money into the hands of our members, and this whole equation of what they do to oil and gas wildcatting and some other things where it just didn't add up to me. But the language definitely creates a problem, and I'm hoping that the solution seems to be somewhere in between 1 and 3 trillion, which is just an absurd amount of money either way. What do you think the chances are of getting the PPP relief that our members still need and only a few were able to enjoy?
Phil, I think that the PPP program will be extended. With regard to the spec, multifamily and land acquisition, I think that's a separate challenge. Unfortunately, you described it there really well. There is an existing guidance at SBA. We believe that guidance, and this is what happens when you write a bill in 3 days. The language that we want that was in the CARES Act was money that is destined, we believe, to small businesses, to keep them afloat, to keep them viable and operating. And SBA came along, and the other concern is you have unequal application of this. You had some banks that were saying, sure, we'll provide you a loan, because spec builders, we believe, secured those loans. And then other spec builders went to different banks, and those banks were applying the SBA criteria to the letter of the law. So it was very unequal application, I should say. Am I hopeful? I believe on the C6 provision, the most generous part of that is in the House-passed HEROES Act, which would allow access to the PPP forgivable loans to 501c6 organizations. And not to get too into the weeds here, Phil, but there would be a reduction for lobbying expenses. In the Senate bill, there's still a lobbying provision in the Senate bill, but if the lobbying threshold, let's take the Dallas VA for a second, if the Dallas lobbying did not exceed 10% of your budget, of your estimated budget, then the Dallas VA would be eligible for those 501c6 funds. That's in the Senate bill. It's in the House bill. I'm encouraged, Phil, that both bills have included 501c6 language. So I'm optimistic. I'm optimistic that there will be another bill. It's not going to be easy. The House has come down significantly. The Senate is holding firm at 1 trillion, and there's a lot of debt out there. There's concern with federal spending at this point. I'm hopeful, Phil, that we will get this. It's not going to be pretty, and it may become attached to something else that keeps the government funded. This part of the crazy season right now. So I'm optimistic.
That's good. And I think with most things, Congress, it won't be easy. It won't be pretty. This may be a JP Delmore question, or if any of you who are CPAs looking through the attendee list, many of you are, so lob in your 2 cents on this in the chat. But we have a question about, it says, how about the deductibility of expenses paid through the PPP program? They gave us the money and now they want to tax it. Do you have any insight on
I
aspect?
know, Phil, I know that is addressed in the Senate bill. I don't know how it is addressed in the House bill. You're right. It is a, it has been a concern. I know NAHB has weighed in on this. Stay tuned. We don't know how this is. Everything, frankly, is up in the air going forward between now and the next several weeks. I don't expect Congress to be in much longer. Again, this being the silly season, that being the election season.
They still got a campaign.
They're not going to be in very long.
Yeah, and just last thought before we kind of go on to the next part of our talk here is that, JP Delmore is the tax policy guru at NAHB, and we've talked to JP about that. I can get a status update on, the deductibility issue. I've talked to him anything from that all the way over to 45L style tax credits for some of the ventilation systems that seem to be more conducive to taking care of this virus. So there's all sorts of things, and luckily all sorts of people at NAHB working really hard to try to make sure that we get the best deal that we can out of whatever craziness and deal comes from Congress. Speaking of some craziness, we have seen just an obscene amount of cost increases when it comes to lumber, especially. I'm getting numbers from our members. They're saying that just over the last week, and of course Hurricane Laura didn't make things any better, that 2x4 studs are up 9%, yellow pines up 6%, OSB up 4% over the last week. Lumber overall, I think since April, up 168% or something obscene like that. I think Rob Dietz gave us that number yesterday. So where are we and where are we going with this? There's a lot of money on the line in terms of our attendees trying to get started and trying to get some price certainty out there. And I know we'll talk about this with Paul Evans here in a little bit, but from a policy perspective, where are we sitting right now?
Phil, you hit it. It is the single biggest issue. Maybe the economic recovery stimulus bill is the closest comparison we have to the lumber crisis that we are dealing with at NAHB. You're right. The numbers add, from what I saw the other day, $16,000 to the price of a single family home. And Dietz's priced out analysis would put into the millions the number of potential buyers that no longer qualify for those homes. Look, I'm sharing with you what I believe to be the case, the stories that we are sharing with legislators like Chip and others throughout the state. The issue is this, that when the pandemic hit, the lumber mills made a calculation that the economy was going to go in decline. And as a result, they reduced production. And I know you will hear stories later in this update about what exactly happened. So I'll try to be brief here. What are we doing? That was your question. we're trying to get the lumber mills to increase supply and ramp up production. Our team is having dialogue and conversation to try to make that happen. We're also having discussions with the folks in the administration. We have talked to the National Economic Council, Larry Kudlow. I know a good number of the folks on this call have seen on CNBC and other shows. His deputy, our senior officers, met with last Friday, in fact, to talk about the concerns and housing being the shining spot on the economy. Housing always brings the nation out of recession, always. And we want to do our share this time around, but it's very difficult when you're paying up to $900 per 1,000 board feet from prices that used to be in the 500s and records that were set back 2+ years ago. The records are today. What we're dealing with is right in front of us. We're having conversations with the U.S. trade representative, although this is not so much a trade issue as it is a supply issue. We have a shortage, and we are hoping to ramp up production. We are hoping to encourage the mills that this recovery is for real. Dietz's analysis, again, over the first 7 months of July, shows an increase in permits of 3.4%. The builders that I talk to say the demand that is out there is increasing, and we don't expect that at any time soon this will slow down. Well,
Right.
It will slow down if the price of lumber doesn't come back in. Now, I also recognize, like many other industries during the pandemic, I get it. You know, the lumber is essential, like you started with, Phil, with the housing industry being essential. Lumber is in that same designation. But there were, when the pandemic hits, somebody that works for a mill may contract the virus and they have to shut down. I mean, I get it. I'm sensitive to that. The same thing could happen in the housing industry, and you've got to shut down, and that's what happens, So the mills, from the data that we've seen, public data from the Bureau of Labor Statistics is showing that employees are coming online, additional employees are coming online to help ramp up, but it's not enough, to be honest. And I'd be curious what the individual here says later. We're really pushing. We're talking to the White House. We're talking to Commerce. The officers are going to be pushing for a meeting with Secretary Ross. We've talked to the Department of Agriculture about how to increase the supply of lumber on public lands. How can we harvest that lumber?
Yeah, just like Canada does, and that's so this is the issue here, and what David and I have been sharing with our local congressional delegation is that it is a trade issue and it is the supply issue. To me, those are inextricably linked on this, because on one hand, if you're a domestic lumber supplier, first, this is heavily taxing the homeowner. It's adding to the housing inequities and the inability for a lot of people to access the great schools and the great homes and communities that our members build. So even if it's done temporarily to relieve this spike and relieve this burden, something needs to be done with tariff, supply, or both, because it's suppliers can't have it both ways. You can't keep production low and prices high and then have this artificial block up there on foreign competition. So something's got to give. Otherwise, you're just going to continue to heavily tax the consumer and encumber our ability to lead this recovery.
We're encouraging, Phil, the White House to encourage the suppliers. We are, as you said, it's a two-pronged approach, but it's all, there are several items that we would like to see happen. So therefore, our communications and those who have reached out, I applaud you and appreciate very much the context. I know some of you have made contacts with Dr. Burgess on this issue, and they are engaged, as is Chip and a few others throughout the state. We're really all of the above. We want to generate noise on the issue and get the president's attention. This is critical to his, just putting it out there, to his reelection. The economy has to be strong for him to go in, and housing is doing its share. It really is.
And I think I think you explained the stakes really well. And just to try to make this seminar interactive for each of you out there in the attendee universe, Sheena is about to send you a question on just, especially for the builders here, how hard you've been hit by lumber. Your answers will be anonymous, but in the aggregate, I think it's going to give us a pretty good idea of where we stand on this. So if you're not buying lumber, first consider yourself fortunate, and also you can X out that poll. But builders, we really want to hear where you stand on this, and we'll save and share those results later. Something's got to change. I'm not here. I know probably most of you out there are fans of the president. Maybe some of you aren't. I'm just here to call balls and strikes. And I know from the beginning of this administration, the lack of a lumber deal with Canada has been a big challenge, and it's led to a lot of volatility, and it's coming home to roost now, even more so than it did back in 2017. So I guess that's kind of a good transition. We'll have a question on this too, coming in a little bit. I'll cue that in a little bit, but just those of you that haven't been paying attention or living under a rock, we do have an election coming up in November. We have an awful lot of things that are happening both at the local level. And by the way, if you've got any questions on what's happening at the local level or anything else for Lake and I'll probably answer the local ones, and you can do that through the Q&A in the chat. I'll add that we have, you had mentioned David before, David's the best local industry lobbyist and advocate. That David Lady is the best that you're going to find anywhere in this region, and has done so much for each and every one of us on this. And he's also a rare breed that has great relationships because he enjoys being around politicians, which I really don't, but he does. So I'm glad he does. And I'm glad you do too, Lake, because we're using those relationships to try to keep our voice strong. And we've got a lot of friends that are up for re-election. We've got the presidential race. So just, kind of talk a little bit about how Texas has become a battleground of sorts. There's been a lot of attention given to us, and maybe being a swing state. I don't know, how the data will prove out on that. We won't know till November, but there are some very critical races here, from the U.S. Senate race and John Cornyn, who's been a good friend of ours, all the way down to some House seats. So can you just kind of give us your take on where we're sitting here with especially these Texas-centric races?
Sure, Phil. Look, at the presidential level, it's going to be a very close race in the state of Texas. I do believe the president will win in Texas. I don't think it's going to be by a lot, but I do believe it's going to be competitive. If you are a supporter of the president, the challenge that he has is to win those 4 states, along with the ones that he won in the last election, that being Michigan, Minnesota, which I know he didn't win but was close, Pennsylvania, Florida. Nothing has changed. Those states are as critical to his reelection. Arizona has now emerged as a very critical state for the president. Simply, he's going to run on the economy. And we, again, if you're a supporter of the president, you're going to hope that the economy continues to improve between now and November. So, I think it's going to be a competitive race. Phil, you gave a great lead in with Senator Cornyn, who has been a great, terrific senator for your state and for NAHB. We are certainly hopeful Senator Cornyn is reelected. And why is that? And Phil, I know in this state how important Senator Cornyn has been in the building codes issue. And I won't get into the details, but the senator has introduced on two major bills, a disaster recovery bill in the last Congress to include 2 code cycles and to add additional flexibility and for the ability to amend the code before it gets promulgated into the legislature. Senator Cornyn has stood up. It sounds like I'm a campaign commercial for Senator Cornyn here.
But I'll say Lake on that. You all, especially the builders out there is a lot to worry about with the 2021 Energy Code and some of the provisions that were in there. I'm hearing positive things on how maybe some of that could get curtailed a bit with the appeals that NAHB has filed, but Senator Cornyn has done a great job getting out ahead of this issue and realizing that we need to have the local ability to maintain flexibility over the codes, because we've seen it with the 3 air change per hour issue that we're able to address here. There's some things we can do locally that don't always have themselves as a one size fits all type of deal for the national codes, and Senator Cornyn's done a great job in keeping that going.
We hope that continues. We're optimistic that he will be. I don't know that his race has reached the top echelons of the competitive. It's certainly not Colorado or Arizona competitive. It's probably in the tier below that. So we're optimistic. So that's a little bit about why he's so important for us.
Yeah. What about, I know obviously he's a different candidate in a different situation than what Senator Cruz was here a couple years ago. But what about down at the House level? I mean, we've got some friends like Kenny Marchant that are retiring. We've got, and by the way, I'll tell everybody that's our board hears this all the time, but maybe you all don't. Our philosophy on this is that we're not R's, we're not D's, we're H's, we're Housers. We want to make sure that everybody has a roof over their head and an affordable place to call home. And there are Democrats like Mark Vesey and others that really get that and understand it. And there are Republicans like Senator Cornyn who do as well. It's one of the things I love about this job is that we're able to talk with both sides of the aisle. And I know we're doing that here, but we've got some friends who are retiring, as the case of Kenny Marchant, and some really interesting toss-up races or ones that are too close to call right now, that and others on the House. So what are you looking at here in the Dallas area? What are we looking at?
In the Dallas area, Phil, I look at the 2 toss-up races, one being Chip Roy, the other being Kenny Marchant's race. You call out Kenny Marchant, who I go back to his work on the lumber issue for us. We're trying to get him engaged this time around, even though he's, as you pointed out, retiring. Those are what Charlie Cook and what NAHB uses as its criteria in its pack. Those are the 2 races that we look at as toss-ups. Van Taylor has emerged into a leans race, which sort of surprised me a little bit, but his race has now gotten very competitive. That just kind of snuck up on us. The other race I would point out in the Dallas area, certainly Colin Allred is in the old Pete Sessions district. Genevieve Collins is running against him. That race is identified as a likely Democrat. I do anticipate that it's going to be difficult for Genevieve to win in this race. And I think in the other races, for example, Beth Van Dyne that they list as a toss-up, I think she's going to be okay. It's going to be a challenge. across the state, Phil, and I know we're focusing on Dallas here, but I counted nine competitive either toss up or leans races throughout the state. So you talk about Texas, and I know David knows this, that Texas being a battleground, it has certainly emerged as a battleground for, especially on the Republican side. But I'm glad that you pointed out that we are H's because there's a number of Democrats that we work with throughout the state. And I know Henry Cuellar and Veronica Escobar, not in the Dallas area, but throughout the state as some of our best and biggest advocates for the housing industry.
You bet. And I think, the Van Taylor race where, you look on the ground, as Jeff Dworkin just pointed out, see a really strong campaign, but then you look just overall with the president at the top of the ticket and the support perhaps not there as strong as it was 4 years ago among especially suburban women. That's going to have an impact on Van Taylor's race. I think the other unknown in Texas now is that we don't have straight ticket voting for the first time around. So you're not necessarily just voting for a letter and walking out of there. You're walking down the ticket or maybe not. So that's going to have an impact here on some of these races that we're just not sure about. But there are a lot of things I'll tell everybody that we're following at the state house level. The math is there for the Democrats to pick up the Texas House for the first time in many, many years. So it could be it'll tighten up, I think, one way or another, but that one's going to be a really close one. And it's, likely that we'll still have a Republican majority, perhaps a large majority in the Senate the way it goes down, but just a lot riding on this election. And, for us, Sheena, can you launch a poll about just asking people how they see the election's impact on their business? And then while that's coming up, one last thing on this lake, what do you think about the presidential race? If you had to handicap it, I'm not gonna hold you to that crystal ball, but you're the Washington insider here. So is there anything that you're seeing that maybe isn't on people's favorite cable news network?
Nothing that's, let me disregard the poll here. I think it's going to be tough. And I'm basing what I'm seeing from cable TV shows, and it would appear the challenger, Joe Biden, is anywhere between 7 and 9 points ahead, and the shows tend to have him in front in those key battleground states like Pennsylvania. They're showing the race narrow. There's no doubt that is what we are seeing, and the convention bounce that the president got is significant. And but nevertheless, it looks like that the challenger, in this case the former vice president, is ahead in a state like Pennsylvania and in Florida. So I think Phil, I think it could be a long night. The mail-in, good heavens, I really wish I had the pulse of, I don't even know if we're going to know on election night if, and then I heard the president say yesterday, if you're in North Carolina, to vote twice. So there's a lot to happen between now and the election. And I'd have to, you asked me a question, I want to give you an answer, even though I waffle on everything. I do think Biden comes out maybe ahead on this one. Cornyn wins, and let's hope that our housing House advocates remain and are elected into office.
Yeah, absolutely. And just the way 2020 has gone, I'm going to expect the unexpected. I'm going to expect some chaos and a mess. I hope it doesn't come, at the expense of, what it has in a lot of our cities here. It's been a challenge, and, it looks like the overwhelming majority of our attendees are at least somewhat concerned about the impact of the 2020 elections on their business. Maybe 14% more optimistic, thinking they're going to be fine regardless. And you know what? Like I said before, with the way this organization works and how our advocacy is, we can have a voice to and an ear from either party. It's just in terms of how we can frame the issue, it each comes with its own set of challenges. And I think regardless of what happens on election day or whenever it's sorted out, there are going to be some things that we'll have to adjust course on and deal with. So I don't know if there are any, I'm not seeing any questions in the Q&A for Lake here, but it's kind of last call for those. Like I said, we've got our Home PAC Political Action Committee doing interviews, engaging also with city council races. A lot of those have been delayed from May to November. So there is everything to play for and everything riding on our industry and who we get to work with, and a lot of friends up for re-election or challenging for some of these seats at the federal, at the state, and at the local level. So again, Lake, thank you very much for everything that you do for us and for being such a champion for Texas. I know the other state that you have to deal with is California. Tell us a little bit, because it'll make everybody feel better out here, just really quick, about some of the differences working in maybe a 90-second answer working Texas versus California.
The differences are so different, Phil. Well, in Texas, you have it's a business-friendly state. It is certainly not the case that is in California. Not that Texas doesn't care about climate change, but first it's like on the front burners of the politicians. In Sacramento, you do have a super majority of Democrats controlling the entire state. So you do have a flurry of regulatory activity, and the discussions I have with their state executive officer, it is the biggest challenge that he has to make sure that housing is still the American dream. And yeah, it's important, but the fees and the regulatory activity that is associated, it is not a business friendly state. And I know the challenges that Dan Dunmoyer has out there are immense. Scott,
yep,
make no mistake, Scott has his degree of challenges, and Phil, as you pointed out, the House, the state legislature has an opportunity here to change its leadership and the challenges that will come with that. I still look at Texas as a even with the mass population coming into the state, it's still the perception that I carry with me is that it is still friendly to business and much to our industry. It's receptive to the housing and construction industries. So
yep, we have benefited from the migration here. Unfortunately, a lot of the migration here has not come with a checking of some of those ideas that are more exclusionary to housing that they had in California. So therein lies the problem, and we'll see what happens in November on this. I know we got a question here from James about lumber incentives or incentives to get prices back. I'm going to hold that one for Paul Evans when Paul gets on there, because I think he'll be able to answer that. But again, Lake, thank you very much. Ronnie Lyles, get yourself ready to talk a little bit about Operation Finally Home. But just a big virtual applause for you, Lake, and everything that our National Association does. Thank you very much, and I appreciate you joining us today. We'll have Ronnie talk about Operation Finally Home, and then we'll get our all-star panel ready to go. So thanks again, Lake. Take care.
thanks for having me on. Good to see everybody.
Too. Ronnie, good morning, sir. How are you?
Good morning.
Hey,
Fine, Phil. Good to see you, sir.
Well, love to have you here. Glad that you could spend a little time with us at the summit. We have a really outstanding partnership with and labor of love for Operation Finally Home. And we have since 2013 over 7 different projects. And, you know, Ronnie is a great friend of mine and the staff and our team here, great friend of mine and has been a great advocate for our local projects. Ronnie, tell us just a little bit about Operation Finally Home and the incredible veterans and their families that get the opportunity for mortgage-free home ownership with your organization.
Sure, Phil, and thank you, to the Dallas Builders Association for holding this State of the Industry Summit. We appreciate all the work you do. Operation Finally Home is a national nonprofit that started right here in Texas back in 2005. I know many of you know about who we are and what we do, but our mission is to provide mortgage-free homes and home modifications to the America's wounded military heroes as well as injured first responders. People are always asking, how many projects have you actually done? So last night, I just wanted to kind of get an update on exactly what we have done in our 15 years. We've done over 284 projects and we're in over 30 states. 176 of those are new homes constructed. We've got another 47 that are either in the planning stage or under construction. On the home modification side, we've completed 41 projects. We've got another 20 that are in the planning. Let me also say that thanks to the Federal Home Loan Bank and the Texas Veterans Commission, they've helped to provide some grant money for those home modifications, which has really kind of helped ramp that up. But as you said, Phil, we've done 7 projects in partnership with the Dallas Builders Association. First one was Tim Jackson Custom Homes. He did in Little Elm back in 2014. Victory Custom Homes did one in Cedar Hill back in 2014 as well. Then in 2016, Mike Misher Builders built one in Rockwall in 2016. Classic Urban Homes did one in Oak Point in 2016. Altura Homes did one in Greenville in 2016. And then MHI did one in Aubrey in 2018. And then our last one was in Irving, the Winston Custom Homes back last year. So that's our 7 that we've done. I'm proud to say that we're in the early stages of project number 8. The city of Irving donated the lot for Eric King's project and has turned around and donated 3 more lots. So our next project is going to be right there in Irving. We've already got a candidate selected. We're currently working on the house design. And then V Luxury Homes is going to be the lead builder on that project. We do actually even have a 9th candidate, our candidate for project number 9 that's selected, but we do not have a builder at this point as well on that one. But
yeah, I would just say, emphasize the great generosity that Rick Stouffer, the mayor of Irving, and the council staff have all shown to Operation Finally Home, donating, originally 1, but now 4 lots for Operation Finally Home. And we've got, 1, as you said, underway and another veteran ready to go. I'd love to see a builder step forward to help that veteran also move into that community, because we have the makings of a really good partnership and a really great community with a lot of veterans who can derive support from each other there.
Absolutely, Phil. And as Lake demonstrated that, these are some challenging times in the building industry. I'm proud to say that our donations have continued to come in and stay about the same as they were. So that's a great thing. But, this is a collaborative effort from all of us. So together, we are truly changing the lives of these heroes who've worn the uniform in defense of this country. And, our feeling is that a mortgage-free home is the least we can do for someone that's been willing to lay down their life, for the freedoms and values that we often take for granted. So I just encourage people to please be watching for the upcoming news as we get ready to move forward on these projects there in DFW area. Absolutely. And again, just, thank you to all the members of the DBA and to DBA itself, for what you do for the building industry and the way that you give back to those who have given so much.
Well, thank you for all that you do, Ronnie. It's a labor of love for us. And, we're our members are in the business of building the American dream, and these veterans are in the business of preserving and protecting it. So it is a hand in glove partnership and something that comes from the heart, everybody that participates in it. So again, thank you for spending your time with us today and just for all you do to make it happen with OFH. I think we have some great things to come in the city of Irving in the very near future. So again, thank you, Ronnie. At this time, I want to get the blue ribbon panel seated and ready to go because Steve, you're going to be up first, and then we're going to have Jeff on deck, and it looks like Paul in the hole there. So we'll just kind of walk our way through here. But before we get going on our blue ribbon panel or all-star panel, I want to have Sheena queue up another just kind of more of a global poll here just to see what your most significant concerns are for the housing industry going into 2021, because this group is going to address quite a few of them. We certainly talked about the elections and some of the uncertainty there. I'm hoping that we're going to be able to solve some of your questions. So again, send those through the Q&A or the chat, and we're just going to walk through one by one here with our panelists and ask them a few questions as we go. So Steve Otto, really pleased to have you here for on behalf of the Federal Home Loan Bank. And just kind of at the outset here, for those that aren't familiar with the Federal Home Loan Bank, can you tell them just a bit about what it is that you do and what your specific role is with the organization?
Sure. Thanks for having us and giving us the opportunity to visit with you, Phil. So the Home Loan Bank system, there are 11 banks in the Home Loan Bank system, and we're roughly defined by geographic territory. So the Home Loan Bank of Dallas covers the states of New Mexico, Texas, Louisiana, Mississippi, and Arkansas. The system was founded coming out of the Great Depression by Congress, and the theory was we need a financial system that can backstop the traditional financial system, if you will, to prevent runs on banks from happening again. So one of the powers that was given to us, or one of the luxuries that was given to us at that particular point in time, is we were awarded the GSE status, which is government sponsored enterprise. And nobody really thinks about that, but that's what Fannie and Freddie were prior to conservatorship. So we are 100% funded with debt. And the thing that makes us work is our debt has the implicit guarantee of the US government. So our debt is trading at a slight spread to treasuries. Now, why is that important? So the system itself is, and let's just look at the bank in Dallas. So we are a cooperatively owned institution, which means our customers are also our shareholders. So what does that look like? So it's virtually all banks and thrifts, let's call it 95% plus in our territory, along with a significant majority of credit unions, insurance companies, CDFIs, state housing authorities, and generally anything that has a nexus to housing, if you will. So what is it that we do? So there are two components to the business, if you will. So I'm the director of sales, and I'm responsible for what I will call the relationship management piece, and we'll get back to that in a second. But the other piece, I would look at it more as the public policy piece. So economic and community development is all in our mission statement. What I do doesn't even exist in the mission statement. So what the economic and community development folks do is they administer various programs that look a lot like grant programs. Some of those grant programs may be direct. So if you look at nonprofits in the the Dallas-Fort Worth Metroplex. I think we're doing business with about 12 of them. And they look a lot like the local habitats. They look like local CDCs, that type of thing. The other outreach that that group does, and things like, think in terms of down payment assistance or rehabilitation assistance, certain multifamily project assistance. That stuff is done in partnership with our local member institutions. So we will combine with a local bank. We'll put some money into a deal. The local bank will put some money in the deal. And those are largely grant funds. So a certain amount of our income on an annual basis, and it changes and it depends on things like local disasters and that kind of thing, is dedicated for community development and economic needs. The other side of the organization, which is the side that I'm involved with, think of it in terms of we are Bankers Bank. And I'm going to use that really loosely because what we are responsible for is taking the loans on member institutions' balance sheets and turning them into liquidity. So a bank could sell its loans, but if you do that, then you lose your earning power. So what we do instead is provide a line of credit to virtually all of the financial institutions that I've discussed previously, so that they don't have to sell their loans. And that line of credit is based upon the types of loans they originate. So that's one piece. The other piece of what my group does is we actually buy 1 to 4 family mortgages from the member institutions as well. So it's kind of a broad encompassing objective, but if you think of it in terms of community and economic development, as well as financial support for the financial system, that's probably the best way to look at it.
That's great. You know, there's also a lot going on, and hopefully we'll have some time to kind of talk about what your crystal ball looks like, what we're seeing in terms of rates, what's driving the decisions for you and the banks. But, you know, first, what's the latest on M&A activity in the banking industry, and what will that mean for a typical family wanting to get a mortgage, or a builder like many of those on this webinar right now wanting to get a construction loan?
Okay, so when I think about M&A activity, you look through the activity itself and you look and see what's driving the activity. And generally what drives a bank merger is one bank has something that another bank needs. So you may have a bank with strong loan demand, another bank that has strong deposit growth, and you would marry those two institutions. Another way to look at it is, and this is fairly common around here, people want to enter, whether it's the Dallas-Fort Worth market or the Texas market or what have you, and it's a whole lot easier to buy someone in that market as opposed to start a de novo and try to be successful from that perspective. So that's another way. And then the third way that I think about it is in terms of you just want to accumulate mass, and in so doing, you can eliminate overhead. And by eliminating overhead, you become a much more, in theory, efficient organization. So the first two strategies I talked about may or may not be publicly traded strategies. The last one that I described definitely is. So prior to the pandemic, one of the things that we saw was the beginning of a wave of merger of equals. So you have two banks relatively the same size that decide to get together, decide that they can cut costs, and essentially at the end of the day, the shareholders of the acquiring institution will benefit in the long run. The acquirer itself benefits in the short run. So that can occur for a number of reasons, one of which could be management succession. So absent the merger of equals, generally what happens from a public traded perspective, you need to have currency. And your currency needs to be trading at the upper end of a range. Well, right now, what you have is bank stocks that are, for the most part, trading at lower ends of ranges. So I would say that, at least for the intermediate term here, I wouldn't expect to see a lot on the M&A front. Now, why are bank stocks trading at the lower end of the range? Essentially, you have so much uncertainty right now in terms of what's going to happen from an economic perspective. Equity investors are a little cautious. Okay, so I don't know that I would worry about M&A from an accessibility for a 1 to 4 family mortgage, if you will. And the reason why I say that is it's more important about what's going on in the back end than what's going on in the front end of the system. So you're worried more about keeping the secondary market alive and vibrant than you are how to get to the secondary market. Over the course of time, that channel will change. We will adapt to that channel. Nobody would have thought 20 years ago that Quicken Loans would have surpassed Wells Fargo as the nation's largest mortgage lender. Well, they have. So that wasn't really a conscious thought on a consumer. It just evolved over time. Now, from a builder line perspective, I think the things that you need to keep in mind is there, and this is a little bit more global than M&A, but just to paint you a picture of what's going on, and there's a question a little bit later about this, but there is a tremendous amount of uncertainty right now, and bankers generally don't like uncertainty. And if there's anything that would give a banker pause with respect to a builder line, it's just the overall uncertainty. Now, having said that, I will tell you that the point that was made earlier about the 1 to 4 family market being the strongest sector of the economy, we see that on a day-to-day basis. Whether it's a mortgage originator, whether it's a warehouse originator, whether it's some of the, at a 50,000 square foot level or 50,000 foot level, we do see some of the C&D activity. There's no question that's been the strongest performing sector for the bankers in our area. But just keep in mind, there are other things in their world that can change their world that may inadvertently impact or affect you somehow in the future.
Yeah, one of the, and it was interesting that just the poll that we took a couple minutes ago, economic uncertainty in general, 21% of you are concerned about that. And, I share that as well. I think there's a lot of unknown out there, especially with rates. Rates have been all over the place lately, but are widely expected to remain at or near record lows. What are the main drivers in that space right now with interest rates, and what role does the Federal Home Loan Bank play? And also, what metrics are you monitoring on that front as we move forward?
So when you look at where rates are today, that's largely a function of various forms of injection of liquidity into the system, whether it's the Fed buying mortgage backs, whether it's the various stimulus programs that have been put in place. It's all about liquidity right now. When do I think rates, what do we look at? I will tell you that it wouldn't surprise me that whenever a vaccine is released or developed, or there is some type of vaccine news other than what you hear on a day-to-day basis. It's more significant, more substantial, more tangible. It wouldn't surprise me if we see a spike in rates. Now, whether or not that is a prolonged spike in rates, I can't tell you that. What I can tell you is when you look at the impact on us, and what we look at from a system perspective is that the Fed has been so aggressive at buying mortgages, whether they're in the form of mortgage-backed securities or what have you, that has made it extremely difficult for us to buy mortgages because they have driven yields down so much that economically we have a hard time. And again, it's a different world and it's a different model because they're doing mortgage-backed securities and we're a portfolio lender, but we have a difficult time competing with them. You can't compete with the Fed. So we're much like everyone else. We're watching, we're waiting, but essentially as long as there is a massive amount of liquidity in the system, rates are going to remain low. And until there's some type of COVID solution that is tangible on the horizon, I would expect rates to remain relatively low.
So are you watching just kind of on the vaccine front? And I don't pretend to be an epidemiologist or a virologist or whatever, but is the indicator you're watching for approval of a vaccine, realizing that it's going to take a few months to actually deploy to the rest of us, just that certainty that comes with, hey, we have it and we have a window? Or is it something a little bit further down the line in terms of when it actually gets into the arms of the American public?
Well, I think if you look at what I described earlier about a spike, I think the spike comes with the approval. Now, I think whether or not that spike stays there is dependent upon what the rollout actually looks like. And I know that there are plans in place and that kind of thing, but until a market actually sees it, so a market will move based upon speculation, but in order for it to be a sustained move, you kind of got to see something. So I'll tell you that we did a webinar last week with an infectious disease specialist from Boston University. And while she can see a vaccine on the horizon, most of the medical experts don't think that a vaccine does it. She thinks we are in this for the long haul. She thinks that masks, social distancing, all of that kind of stuff will be around for a while. So I don't know. All I can tell you is we're monitoring, or we're listening to the expert as it relates to vaccine development. I'm not really a prognosticator. I can tell you that we do expect that spike. Now, whether that spike remains, I think it depends upon what happens in that next step.
Yeah, and certainly we will continue into uncharted territory there. You know, it's good that the news has been positive on the vaccine and therapeutic front. It's good that we have multiple shots on goal in that regard, but yeah, it's not going to be one day to flip the switch and we're out of this, as much as I'd love it to be. You know, the other thing, and this will be the last question I've got, in the 2 or 3 minutes for your time slot here, is I think this pertains to really what's going to happen in November on many lenders sell their 1 to 4 family and multifamily loans to Fannie and Freddie. What does the government need to do and avoid doing to ensure that we have a vibrant secondary mortgage market?
So I think the short answer is liquidity. I think a longer answer is if you look at what happened during the credit crisis and the disruption that caused, that was a function of policy, and that was a function of, back in the 90s, Fannie and Freddie reducing credit standards so that they could put more people in homes, and then Wall Street grasped onto it and you kind of had a downward spiral in terms of credit quality and that kind of thing. And then what happened is, coming out of it, you had the reaction of, you need to have better disclosures for the consumers and that kind of thing. And at that point in time, you had the majority of community banks in the country say, I'm out. I can't do this mortgage business when I get 3 of these a month. You have to do it in volume to be good at it. And so those are the things, more so than a market type event, that I would look for and that I would worry about. Look, the Fed has become very adept, and they understand what it takes from a liquidity perspective to keep markets functioning. And you can look at the progress they made from the credit crisis to this crisis, and how much more proactive they've been and how much more orderly things have been. So I think at the end of the day, you can look at GSE reform, you can look at all of that, but that's not going to happen in an election year. It's probably not going to happen the year after an election. So there are a number of things that you can look at, but the main thing to keep in mind is, as long as the Fed is accommodative in keeping liquidity in the system, I don't think there's an issue.
Thanks, Steve. I appreciate you being on to share your insight. And, there's a lot of great work that the Federal Home Loan Bank does for nonprofits here locally and around the country. So applaud your efforts, and thanks for giving us a few indicators to look for this morning. Just to try to make sure that we can get here on time, I want to keep the program going. And, again, thanks, Steve. We're going to have Jeff Edens with James Hardie coming up next. Jeff, first, thank you to James Hardie for being a title partner for this year's State of the Industry Summit. I wanted to give you a couple minutes just to promote James Hardie as our title partner here. So I'll let you lead with that.
Yeah, thank you, Phil. Can you hear me okay?
Yeah, I got you.
Yeah, first off, thank you for the opportunity today. We're very proud to be partners with the DBA and our dealers and builders across Texas. We take pride in being able to support our customer base with a top quality product. And overall, we want to be the best partners in service to our customers. So again, thank you for the time. If anybody has questions, my contacts are on the invite was sent out. Please reach out. We'll always be here to answer questions. My team's here to service and make sure that we get you everything that you all need.
Thanks. Again, appreciate your support, and you've got a great team here who I work with and talk to all the time, and they keep me abreast of what's going on in the field. And that kind of leads to my first question here. I kind of alluded to that with the chat with Lake, is that there's such a disruption nowadays in our supply chain, and some of those are just a COVID case or two away from having some real challenges. So what impact, if any, has the pandemic had on James Hardie, the corresponding spike in demand that I think exceeded all of our expectations? And, are there any challenges that you're experiencing in terms of filling orders going forward?
Yeah, so good question. As the COVID pandemic unfolded, Hardie and its leadership team, we took immediate and early action to develop strict guidelines and processes to make sure we were still operating safely in our facilities and in the field across our company. And this was paramount to ensure continued output without service interruptions of our product to our customers. So thankfully, here in Texas, this market is serviced by our 2 flagship plants located in Cleburne and Waxahachie. So our product here is in Texas, made by Texans, for Texas. For the second part, with the increase of demand, we adopted a disciplined approach to maintaining a continued flow of product for our customers in the market. Their future forward demand signal, a better understanding of what our customer needs were, conditioned Hardie in general to support the increase in demand. The overall integration that we have with our customers, with our dealers, allows us to know what product is needed at what time, and for what project. Now, as everybody can see, when the pandemic started, we didn't expect this increase in housing production. But due to the swift action stated above, that we were able to continue to service the overall home building industry at a high level.
It's great that you guys are doing what you can to keep up. And I think, the Texas-centric businesses have certainly experienced less frustration than maybe some in the states that have been more restricted and more shuttered. Kind of shifting gears a little bit to, just House Bill 2439. That was a big win for us in the last legislative session. It's going to be a big challenge for us to defend it in the coming one. And that, just in a nutshell, allows builders to, absent of any covenants that are agreed to via a arm's length agreement, it prevents cities from picking and choosing the products that go into homes based on their preferences, and thereby artificially driving up the cost and the access to housing. So, it's been a benefit to allow an equal playing field for James Hardie and others. But what are you seeing practically in terms of, new communities and maybe new opportunities where otherwise you would have been crowded out by some of these local mandates?
And our team is actively talking to everyone in the field about this. And with the House Bill 2439 passage and all the work that the DBA and you and your team did to make that happen, it's allowed James Hardie Building Products the opportunity for us to really showcase the element of design with our full exteriors of the homes here in Texas. So we're seeing more communities take advantage of these design elements across the Metroplex, where we once usually only seen these in the rural counties throughout Texas. And we're now seeing those modern farmhouse looks, those aesthetics of inside of these metro communities today. And these come really off of the backs of what Chip and Joanna brought to the market. We've seen a lot more of these farmhouse style houses popping up in these communities. But like you said, this has also allowed builders to alter designs to positively impact the housing affordability crisis that we have. So we're getting lower cost houses with a higher quality product on the exterior of the homes.
Yeah, it's definitely a win-win, and it's resulted in more of a diversity of design and more diverse communities in terms of who has the opportunity for home ownership. It does have its critics, and there are people who are opposed to those principles, and we're going to have to work really hard in the upcoming session. I got a question from Jeff Dworkin. He said, what weeks or months of materials do you presently have on the ground? So I guess that's kind of maybe speaking to, any sort of supply chain concerns, which 35% of you have in terms of attendees here is your top concern right now.
Yeah, so like I said earlier, with us having the integration with our customers, it really allows us to hear what's coming and what their needs are, so that we're running a lean manufacturing. So we're not sitting on a ton of inventory. We're really listening to what our customers' needs are and making sure that we're producing those products to fill those orders.
That's great. Just kind of looking ahead, like a lot of us are, to 2021, what are the initiatives and priorities for James Hardie? I mean, certainly we're going to be right there, with you. It's not just a cladding bill for 2439 and defending it. It touches every aspect of the home and the materials that go in. But, beyond that, what are the main priorities for James Hardie in Texas and around the country? And are you all hiring? What's your labor force look like?
Yeah, so first off, our priority is to provide a durable, reliable product to our dealers, our builders, and overall the end homeowners. This continuing pursuit of providing a long-lasting building material is there to best serve our communities throughout the U.S. and Texas. For us at Hardie Building Products, it's about utilizing our full fiber cement line to ensure that we have the best beauty and aesthetics and protecting a homeowner's largest asset, which is their house. So looking forward, we'll continue to use the input from our customers to drive market innovation. So like we said, with the ordering, we're running lean operations within our plants. We're, highly integrated with our customers. So we constantly have our fingers on the pulse of what the building signal is in the market. And that way we're able to, continue to drive innovation. And these are really the major areas of focus for Hardie. Now, I'll jump to your last question that you said there was about, labor. Are we hiring? Throughout the pandemic, our facilities ran, really smooth and continue to run really smooth. And both our managers at our Cleburne and our Waxahachie plant have open positions that they are currently filling with local talent. And that's due to the increase in demand. And we need those people in our facilities to continue to service our customers at a high level.
You bet. And I think that's it's going to be a good segue here down the road to talk about with Craig Johnson and what they're doing at Collin College. But, those are programs that are starting to pop up and gain a lot more interest. And I think people are realizing just how important home is now and everything that goes into it. And of course, James Hardie plays a major role in that in the market. And again, just appreciate your support of this event, as well as the Dallas Builders Association and each and every one of our builder members who are your customers.
Thank you, Phil. I appreciate everything you and the DBA does for all of us here in the market.
Thank you. Thank you, Jeff. I'm going to make the transition now to our friend, Paul Evans. Paul, I think just about everybody should know Paul by now, has just been a absolute stalwart supporter of our education program and our association. Good friend of mine for many years, and seen him kind of move up the ranks and get a larger route to cover with BMC. And Paul, I guess that leaves you today with I think a pretty good finger on the pulse of what's going on in the lumber market. And listening to the conversation that Lake and I had and hearing some of the concerns that builders have on this issue, let's just address the elephant in the room. Where are we and where are we going with this?
Yeah, definitely the elephant in the room. You said something about being a blue ribbon panel. I feel like the black ribbon or the black sheep in the room right now, that's for sure. So
well, at least we're virtual and we're not able to throw anything at you, but you're just a part of the chain here, and I'm just glad that we're going to have this conversation.
Yeah, so I really appreciate the opportunity. When you invited me to do this, I looked back, that was back in January, and we were going to do this in March. The conversation would have been a little bit different, that's for sure, no doubt. But I ran the numbers as you guys were talking. Lake was talking back and forth, and we've had a year-over-year increase on commodity products. That includes random lengths and panels of about 130% year over year. That's a huge number. But if you look back on it, actually about 85 to 90% of that is since March. So there was increases coming online even as far back as December and January. So you saw the increases coming. So it was funny. The question came up was what incentives do and I'm assuming the lumber yards have to lower the prices back to pre-COVID. Well, they lowered them back to pre-COVID. We at least get 80% of it back, of that 130%, right? So that piece of it. But I wanted to go back because I was thinking about it when Lake was talking about supply and demand, and obviously you guys are all business people. That the issue is that exact thing, supply and demand. It's not that the mills are trying to make up all the money they lost back in 2009 and 2010, because that's not the case. It's actually a perfect storm. What happened in 2018, there was a commodity correction, if you guys can remember. We actually had some really great pricing back in 2018. Prices dropped considerably, and the mills were caught with that pricing correction. And so they sat back and said, what can we do to resolve that correction for themselves? And so what they did was they got themselves as Jeff said, they just made themselves leaner and leaner, meaning they closed mills in areas where they, were not as profitable. They lowered their inventory levels tremendously. And so when we turned into 2019, they were doing okay pricing wise. They had their infrastructure laid out to where they could get the product that we needed, on time, in full. The OTIF measurement became a really big thing, and so they were able to do that, and their supply was going. When COVID hit, it was the perfect storm because they were already built, had no inventory, zero inventory. They had their employee base down to just the minimal so they could make some money. And then COVID hits and every one of them panicked, as the rest of us did. And they started shuttering. They started slowing down. They started because they figured that the housing demand would go way off like it did in 2009. They didn't want to be caught with all that inventory. So they slowed their mills down, shuttered them, as a matter of fact, in some cases, laid off employees. And then the housing demand didn't slow down. Matter of fact, it got more. So with that, they were caught with their proverbial pants down with no product to sell. It's amazing. Our traders, and just so you guys know, it is a commodity product. So we have traders that are on the phone every morning or late at night, depending upon what part of the country they're calling, trying to make deals. And right now, the deals that are being made are who's got the product. They're not asking how much, they're asking who's got the product. And oh, by the way, if we don't say yes while they're on the phone at that moment, we hang up and call back 15 minutes later, that load is gone and we lose the product. So I guess the answer to the question is, what incentives do the lumber yards have to lower the prices? And actually, we really don't have an incentive right now at all, in the fact that we're just shuttling, trying to hurry up and get the product in so we can then send it out. What we're buying today will not be delivered until mid to late October, early November. So what I'm buying today, and the prices have not slowed down, and I see nothing in the horizon that is going to slow that down unless housing slows down. Now, I'm making a long-winded deal here, but I want to answer some things that Lake had to say as well. Lake was saying, hey, that we need to reach out to to Congress and the White House and say, hey, mills, start producing more, because obviously if we have more supply than demand at that time, then those prices will go down. You're exactly right. The problem is twofold. Number one, they can't get the people back to work that they laid off, because those folks are making more money sitting at home with the incentives that are out there for them to stay home, to curb the pandemic. So number one, I would say, hey, reach out to your congressperson and say, hey, let's get back to regular unemployment. That way those folks will come back to work. That would be number one. Number two, on that side of it, would be that to loosen the restrictions, that the states that have product loosen the restrictions on public land. Northern California, Washington State, those items right there, there's tons of forestry there that we, as the, I say we, the industry, the mills can't get into because it's public land and they have shut it down. Sierra Club has a very strong foothold in those areas, and they won't let us go in there and cut in Oregon and Washington and parts of Idaho and Northern California.
Yeah, and I think that's a big part of this too. Glad that you're shooting straight with everybody. It's definitely not, I can imagine, if we were in a large audience here, you'd see a lot of shifting in the chairs and a lot of people not necessarily getting a lot of comfort that this is going to pass in the near future. And it has so many massive things that are kind of butting up against it on pushing the prices in the direction that they've been going for a while now. What role, because like I said earlier, Paul, where I'm at on this is that there's no silver bullet. There's no just, get back there, flip the switch and get all the lumber out that we need right now. There needs to be, I think, a deal set up with Canada. That's been lingering out for the entirety of this administration. Would love to hear your thoughts on that, because it's a perfect storm to get that taken care of. And also the thing that a lot of domestic lumber suppliers have hit on that you just alluded to, where it's fundamentally different when Canada is able to harvest off of public land and we're not able to do it with even what is widely considered to be responsible for forest stewardship. We're seeing these massive wildfires in California and Colorado in many cases because there are just too many trees and too close of a proximity, and some responsible stewardship would eliminate some of those fires, would allow us to have some new sources of supply. So, you know, what gives here? What do you, if Paul Evans were president or emperor or king or whatever you want to make yourself, what solves this, and what time frame would that be to get the job done?
Well, number one, Paul Evans would never want to be one of those. That's for sure. You know, I barely know the millwork and building industry, so I definitely don't want any of the headaches on there. But the number one thing that I think that could really help would be less restrictions on those plants. What I'm saying by that is that those plants and those mills that have been shut down cannot just fire back up, as you say, flip a switch, mainly because they have to then take those old mills and bring them up to the standards. And I'm not talking about safety standards. That should be number one. You definitely want to bring them up to safety standards. But we're talking about, you know, ozone standards and pollution standards and so forth that are very, very difficult with an older plant to be able to do, number one. Number two is, you're exactly right. It was kind of funny. I'm laughing about this because I went to lunch the other day with three fairly large builders in the nation, let alone in DFW, and you can probably imagine who those guys may be. One of them invited me to lunch, and I walked in and realized that the other two were there, and I go, oh, man, this is going to be. And I started talking about the tariffs and the deal that's not cut with Canada, and one of them just stroked his shoulders and goes, what do I care about Canada? I'm talking about Southern Yellow Pine. And I said, well, you know how many trucks and trains are leaving South Texas or East Texas, rather, and heading north because they can't get product in Canada right now because Canada shut their borders off? I said, that's tremendous. And so you're exactly right. If we don't have a deal with Canada soon, all our yellow pine is going to be going there. Matter of fact, I was before COVID and was traveling to Washington. I saw my first house in Washington State built with Southern yellow pine. It was kind of interesting. Here's a place that has more trees than we ever thought of, and they're building with Southern yellow pine because at the time it was cheaper for them to bring it in and do that. So anyway, so that's kind of a long-winded to that answer.
Yeah, I've got a couple, you know, just to try to hit quickly as we round out our time here. Just kind of speak of the impact, as I alluded to earlier. Hurricane Laura hasn't made things any easier. We're in the I think the prime time for tropical weather season. So what impact has Hurricane Laura have in the short term?
Panel market. Obviously, the panel market, we shifted a lot of allocations that direction. So a lot of the allocations went that way. We were lucky here in the state of Texas, and not just that Laura got a glancing blow, although if you ask my friends in Port Arthur, I'm a Lamar University graduate from Beaumont, Texas, so I know a lot of those folks down there and do a lot of speaking at Lamar University, and they were impacted there in Port Arthur and Orange. But we were lucky because the allocations still come to Texas, and then it's up to the mills there to decide where to send them. So we're okay on that as far as getting the product, but it did raise the price of those panel products for sure. Yeah.
Another question, got two more questions we'll get to for you. Just with the, I think in short for this question, what's the impact in relation to the drop off in Chinese exports? I guess, and put another way, what are our sour relations with China have to do with the lumber world right now?
You know, it hadn't affected the lumber world as much as we had anticipated it would be as far as availability. What it has is it has affected the millwork world and the molding world. If you guys know, they had the anti-dumping laws that came into effect, and we penalized China for that. they've had to move that production from China, the molding production from China to Vietnam, to Indonesia. We were very lucky at BMC because we bought most of our product from Brazil and South America and Costa Rica. So we were okay on that side of it, but it affected the overall side of it. The other thing I want to add to this is we're forgetting, we're talking about the lumber side of it, and I think we're forgetting about the millwork side of it. Most of the builders on the call realize how difficult it was for our mills, meaning BMC's mills, to get molded panel doors for a while. And it has loosened up a little bit. Our availability is getting better from the three major suppliers, but there are only two manufacturers of molded skins in the United States, and three or four layup plants. We call them a layup plant, and they were having a hard time. The issue we're having right now are when it comes to China, and that kind of clicked my brain a little bit. There are no commodity hinge manufacturers in the United States. They're all in China, and they're all in Indonesia. And so from China, when they were shut down, it takes 8 weeks to get a container of hinges in. And by the way, you can only get a 20-foot container of hinges because you can imagine how heavy that container would be. Well, that was shut down, and now we're having issues. We have the doors now, but I don't have the hinges to put on the doors to build the door unit.
Oh, geez.
Yeah, and so hardware, the other side of it, the Schlage Quicksets of the world are having a hard time because most of their production was in China with doorknobs and door handles. So that's the other thing that I think both of those are going to go up in price because nobody can get them, and we're willing to pay whatever just to keep the builders in product. So,
Paul, two last questions here. One, for the builders that are on the webinar today, what should they do in terms of just trying to make their lumber purchase? Is this something where they should wait or just bite the bullet now? And then also talk to us a little bit about the big news with the merger with Builders First Source and how that impacts you operationally and then the builders practically that are purchasing from you.
So I'm going to take the first question, which is the harder question. I don't know. As far as buying product, I really, truly don't know. I don't see any end in sight. I talk to the traders every week, used to, and now I'm talking to them about every other day. They see no end in sight because there's no end in sight, exactly like Lake said. There's no end in sight as far as how housing starts, which is fantastic for the economy, but it's terrible for us. It was better in June for me to have written a check to every builder that I sold lumber to in June because I lost my shirt because I got caught behind it. My purchases, the cost of my purchases were much higher than my selling price. And we corrected that in July and then got caught up again at it in August. So I don't see a good answer to that. If the problem I see, and I talk to those builders, is they can't change their price to a contract that they have with a homeowner. I understand that. I'm in the same boat with them, 30 or 90-day pricing. I can't. I've got to live up to that pricing. I'm not going to walk away from the deal that I cut. They're in the same boat. Last question, BMC BFS. I don't know what that, what we see coming, and I can't talk about it too much, as you can imagine, because of, Phil, in your situation, being an attorney, you understand my hands and my lips are tied for a little bit until the deal is completely done, because it has to go through a bunch of lawyers to get it done. It probably won't be done until the end of the year or the first quarter of next year, and then we can talk about it a little bit more. All I can say is that actually for the situation that we've been talking about for the last 10 or 15 minutes on lumber pricing, I think it'd actually make it better because the buying power of the combined group is going to be huge, and everybody is going to want to sell the largest guy in the room, which we will be at the time, a little over 11 billion if you add the numbers up together. So,
well, Paul, I think as I'm seeing this and getting the audience participation and knowing that we're going to be dealing with this for some time, I'd anticipate us having probably virtually another seminar that just focuses on this lumber situation. And I would anticipate that's going to include some of the members of Congress that we've been talking with, and some folks from NAHB and other suppliers. And I'm just going to get my virtual stick out and say, let's fix this. Come on. We've got a lot of good people working in the same direction here, trying to make sure that housing keeps leading the economy. And I know that you're a big part of it, and our members are a big part of it. And again, I appreciate the honest answers and the tough ones, because it's a tough situation with no real bright line, silver bullet response and solution.
Well, I appreciate the opportunity, and I'm not going to apologize for being upfront and honest, because that's the way I am. But I'm sorry that I had to say that, and I see no end in sight on those parts and pieces. And if we do that again, I will definitely also bring on some guys that deal with it, not every day, but every minute. The commodity traders may be somebody good to have on, so they can kind of reiterate a little bit more. I kind of see it at a higher level, and I don't mean to say that I'm higher than they are in the food chain, but I don't deal with it every day. I do deal with hinges and hardware and doors every day, and let me tell you, that's going to be an issue going forward price-wise. So,
well, thanks for the heads up on that. Your expertise, your support for this association and in the industry, we absolutely know where your heart and your passion are, and we're going to keep this conversation going. So thank you, Paul. Appreciate your time today. Going to transition to Craig Johnson. Craig, you're seeing way too much of me over the last couple of days. We did a great tour with our young professionals group yesterday evening at just what a tremendous facility you have up there in the Collin College Technical Campus, and a tremendous group of students who are going to be a huge part of the future of our industry. And it's just great to see, after so many years of talking about it, the culmination of everything under that facility there. So can you just, I know we've probably got maybe about 10 minutes for you, 10 minutes for Paige here, but just can you tell us about the Collin College program, construction management, everything that you're doing there, and how you came to be a part of it?
All right. Sure, be glad to. Thanks for the opportunity to be here. I'll start with the second part of the question first. So I come from over 20 years in the residential construction world. Got into teaching about 10 years ago, and found myself stumbling onto the opportunity here at Collin College. And Phil could probably tell the story better than myself, because as I told the young professionals last night, I started the program, the construction management program here at Collin College, but somehow Phil's been a part of this program longer than I have, because he participated in the think tanks and the advisory committee that put the curriculum together before they ever hired me, and also served on the search committee, the hiring committee for the position that I filled. So that's how I came to be part of the program. And so I started the program 2 years ago here at Collin College, and the construction management program, of course, is still in its infancy. It's only 2 years old. We offer a level 1 certificate, a level 2 certificate, and of course, an associate's degree in the construction management program. As part of our construction management program, we have a co-op that takes place between year 1 and year 2, which is a great opportunity for our students to get out in the field, get their hands dirty, and get a start on their construction career. So that's one thing that we're real proud of with our program, is having that co-op opportunity for our students. So it's a 2-year program, as I mentioned, and it's a little elevated, a little quicker, quicker time spots. We get people in the workforce a lot quicker with the 2-year program than we do with a 4-year program. So that's just a quick overview of the program. We're real proud of what we have here, and we've experienced a lot of growth in the last 2 years.
Definitely. The facility is just outstanding, being able to go through there, not just the construction part of it, but just the automotive and health wings that are dedicated there. Tell me a little bit about, and tell everybody a little bit about the facility itself and what you're able to do, and how you've kind of become the envy of your peers, even those at big 4-year schools, in terms of what you have there and where that program is going to be able to spread its wings.
Yeah, so we've got Collin College passed a $600 million bond a few years back to expand its campuses, and so this campus, the Tech campus here in Allen, was part of that bond package. It's a 340,000 square foot campus, about $170 million, and it's all dedicated to workforce programs in the trades. The part of the campus that I oversee is architecture and construction programs. We have CAD, construction management, interior design. We've introduced our new construction technology programs this semester with the opening of the facility. So we have carpentry, electrical, plumbing, and then we've also started programs in facilities management as well as construction safety. So we've, with the opening of the campus, we've opened new programs as well to help meet the needs and the labor shortages and try to meet those demands. So that's what we're doing here to try to help as much as we can.
How can we help? We've got a lot of builders, suppliers, all walks of life from the industry on the webinar today. What can we do both in terms of giving students opportunities as well as perhaps participating in some of the classroom discussions? Sure.
Yeah, I get asked that question a lot, and we always tell people, first and foremost, we want personal participation. Anytime that someone can come out and speak to our students in the classroom, we welcome that and we encourage it. The students get a ton out of it. I think it's rewarding for anyone who comes and speaks as well. And I'm constantly telling people, you don't have to come and speak on whatever topic's being taught at that moment in the class. You're welcome to come talk about anything that's important to you or anything that's going on in the industry that you'd like to share with our students. It's all construction related, and we can find a way to tie it into whatever's going on in class at that time. So we would love to have that. Of course, there's always teaching opportunities. Anybody that wants to, dive into it a little deeper than just a speaking engagement, we have classes that, we have a lot of really good, experienced, passionate adjunct instructors on staff here, guys from major companies, residential and commercial. So we love to have that as well. Of course, there's always an opportunity to participate if it's a supplier. We're always needing supplies and materials here as we go through. It's a real hands-on program. So we go through materials, and there's opportunities for those companies to come in and market their program, their products to our students and show us proper techniques and installation of those products. We'd love to see that and have that. Of course, there's always financial participation where they can come in and participate in scholarships. Collin College is an extremely affordable program, and we're very proud of that. Tuition is the lowest in the state. But nevertheless, life happens and students struggle. And, our program is small enough that, we only offer fall classes in the fall and spring classes in the spring. And if somebody has to sit out a semester but due to financial constraints, it costs them an entire year and keeps them out of the workforce for a year. So we always try to find a way to help those students out so that they don't add a year to their education and they get back into the workforce as quickly as possible. So we're always looking for opportunities to partner with companies on lots of different ways. And then lastly, the one thing that's real simple, with the young people and the way things work today, especially with COVID, everything's virtual, everything's online. If you can connect with me on LinkedIn, we post a lot of information about our programs. And then if you can share those posts, then we can reach a lot of people and a lot of students that way as well. So.
Well, thanks, Craig. I appreciate that. I have gotten a scholarship program together here at the Dallas BA. You can go to the construction careers page on dallasbuilders.com. And you're absolutely right. One of the things that I've been moved by interacting with your students is because you are the most affordable program in the state, you attract a lot of young people who are trying to make a really bold move for themselves, whether they be a single mother or whether they be, in many cases, working fast food, doing everything they can to get by. And I want to make sure that that scholarship is in place because it's not a lot of money for those that are in the industry and that are fortunate, but it is a difference maker and a life changer in terms of giving them the access to the great education that you offer there at Collin College. I think you've got an open house coming up on Saturday. Can you kind of close and tell us a little bit about that?
Yeah, absolutely. So we have a ribbon cutting event, VIPs on September 11th. And then on September 12th, we have an open house here at the new campus from 9 to 3 on Saturday, September 12th. Everyone anyone that wants to come out and take a look, you have access to the entire campus, not just our portion of the campus. And as Phil alluded to, we have a building dedicated to automotive technology and collision technology. We have a building that's dedicated to HVAC, welding, engineering technology, and biomedical technology. And then, of course, we have our main academic building that contains all of the student services, some healthcare programs, as well as the dual credit floor for Allen ISD. Let me just throw out one thing real quick. One of the things that we are doing to meet the need of the labor shortage here in our industry is a lot of our programs that we've kicked off this year, and of course the construction program that's already in place, we do have dual credit elements. So we're trying to get high school students in these programs while they're still in high school. They can get about halfway through our program. And so after graduating high school in about a year's time, they can have an associate's degree with one of our programs, and then of course hit the workforce even quicker that way. So we're reaching out to high school students, you know, and one of the challenges that we're trying to expand on and work on is how do we reach these students? You know, most of our students, the one thing that we found is 99% of our students have some exposure to the construction industry, whether it be family or extended family or friends or whatever. What we need to do is reach those students who don't have that tie to the construction industry. You know, those students, you know, there's lots of people that choose careers every day that don't have any exposure to it, but nobody seems to be choosing construction without having that exposure. So we're trying to find ways to reach those students that don't already have that link somehow to construction. So trying to solve that labor shortage problem in every way we can.
Well, that's great, both in solving a big issue for our industry. And yeah, there are a lot of people that unfortunately don't have employment, but you can't move from a catering manager position to a construction manager overnight without programs like yours. And, you know, James, to answer your question, there are internships that Craig would love to, you know, provide to, you know, with nonprofit and for-profit builders. Thank you, Sheena, for sharing Craig's information on LinkedIn. So I invite you all to connect with him and connect those opportunities between Collin College and the students. So Craig, thank you very much for being a part of our discussion today and for everything that you do for the future of our industry.
Thank you. Glad to be here today. Thanks.
Thanks. Well, we've got the anchor leg of the State of the Industry Summit, and I can't think of a better anchor leg to kind of finish this all off. Paige, thank you for waiting patiently here. You have been and are one of the preeminent market experts for the housing industry. And you know, I know you've got a new role now. I'd love to have everybody hear a little bit about that and just, you know, maybe, you know, tell us a little bit about your current focus and just your big picture of what you're seeing in the market right now.
Thanks for having me, Phil. I appreciate it, even though I have kind of changed roles. So yeah, so now I am actually working for an asset management company, and we are currently in the process of closing on 26 projects in the next 4 weeks. And then from there, we'll be closing 10 to 15 projects every month after that for the next 12 months. So to say that I'm busy is an understatement, but having a great time. That has given me the opportunity to kind of see what's happening nationwide. And it's been a really, really fun, you know, look into comparing it to Dallas, comparing it to Texas, and seeing what everybody else is doing. You know, what I will say, as far as, you know, kind of going into COVID and coming out of COVID is, you know, I'd like for everybody to raise their hand if they could foresee the market being this hot and when this all started happening in the beginning of March. And if you raise your hand, I'm going to tell you that you're in the wrong industry. You should be playing the lotto, because none of us really thought that it was going to be this. Even the foremost experts in economics and forecasting never saw it could be as hot as it is now. And with that, I think the most fascinating part, Phil, really has been how the metrics on paper have just completely been counter to what we're seeing in the field. And by the metrics, I'm talking about obviously employment, you know, what we're seeing as far as, you know, the opportunity for wage growth, population growth, and everything. And you know, you look at it on paper and you're like, there's no way that people are going to be buying houses now. There's so much economic uncertainty, but that is absolutely what people are doing. You know, I will use kind of Houston as an example in the fact that they had two of the industries that have been hit the hardest. You know, they had medical and they had oil, and everybody was convinced that Houston was just on, the road to nowhere, and that is absolutely not the case. So I think that that being said, it just shows how incredibly impactful this COVID and all of the things that's brought about has been to our industry. Again, I know I'm preaching to the choir, but it's been really fascinating to see how buyers have pivoted, in all the markets as far as say, you know what, if I'm going to work from home, I don't want to be spending $1 million on a 2,000 square foot home. I'm going to go someplace that's affordable. And I've always been obsessed with license plates, and I'll tell you, I have not seen so many out-of-state license plates as I have over the past 2 months. So I think that bodes very, very well for our market. And, I've seen very similar signs in the other markets in which I'm working.
Yeah, I've seen a lot of New York and New Jersey and some Connecticut's mixed in there more so than just the usual Californians. So maybe that gets a bit of a collective eye roll from the audience, but I think it has a lot of potential in terms of home buyers out there.
Buyer's a buyer.
Yeah, exactly. A buyer is a buyer. And it seems like there's, at first I was like, well, okay, we're going through just maybe some pent up demand, but there is something to this. And I think there's something to this in terms of the Dallas-Fort Worth market being a beneficiary, perhaps to the detriment of maybe some of the coastal cities. So, is that what you're seeing too? And, at what point will we start having to worry about, we talked about a lumber shortage, a lot shortage, which I know is something that you've been kind of waving your arms up in the air to watch for a long time. What's maybe the medium to long term look like for you?
So, I always like to set context. And I think that when everybody was obviously in March and April, really, really uncertain about what was going to happen in our market, the one thing I was really on my soapbox about reminding everybody of is, because of course, everybody was talking about, how does this compare to the Great Recession? And, I can't overemphasize enough the difference in the amount of supply that we had going into the COVID versus the amount of supply we had going into the Great Recession. It is night and day, and that really is playing out. I will tell you that, the feedback I was getting from builders and developers in March and April is that everybody stopped, nobody was buying lots, nobody was developing. And my first thought was, oh, that is the worst thing that we could be doing right now. We need to continue building. We need to continue delivering lots. We need to continue delivering communities. And that is absolutely the case. So, with this acceleration, even pre-COVID, we had extreme acceleration as far as sales were concerned. We were eating into our 2-year window of our lot availability and our home availability, and that has even happened to a greater extent. Unfortunately, although we're having this fantastic demand, it still takes the same amount of time or even longer in order to develop these communities and build homes, just for the reasons that you talked about. Affordability obviously is still a huge concern. I do think that I think we are in a very, very different place in Dallas-Fort Worth than we were 2 years ago had we not pivoted as strongly as we had done. So huge shout out and kudos to the developers and the builders for recognizing that really needed to happen in order to create a much longer sustainability as far as the viability of this market. But yeah, I'm getting texts and emails from people saying this lumber thing this could really be a major issue. And so we're definitely concerned as far as the affordability is concerned and the impacts of materials and everything that goes into that. Anytime, just as the previous speakers had mentioned, anytime we've got an increase in pricing, that's obviously pricing out your buyers. So that's something we're watching carefully, but, along with everything else, the crystal ball is really fuzzy right now.
Well, Sheena, I want you, while we get into kind of the last question or so for Paige here, cue up just how everybody feels about business for you, this year compared to last year in terms of optimism. So I'd love to get some feedback on that. But also, Paige, you've been a great proponent of looking at emerging technology, and sometimes stubbornly, this industry kind of stays in its ways and doesn't embrace it as soon as possible. But the pandemic has, I think, changed things quite a bit in terms of how we view the home, how we work from home. What trends are you seeing potentially emerge out of this and possibly stick even after we get through the health crisis?
There's a lot of things, and the best way to put it really is that we're not necessarily seeing all these brand new things come out of the box and all of these big, massive changes. What we're seeing is an acceleration of the technology and of the things that we thought were going to take 4 and 5 years are now taking, 12 to 18 months as far as happening. So again, great news that we've had the offsite construction and offsite home building that was occurring. We're seeing a lot more demand for that, understandably. We're seeing, obviously a real shift in the way that people live in their homes. And what I'm encouraged by is that builders are definitely responding to that. I received a survey from Pulte the other day asking, okay, how much more would you spend if you could have like an entire work from home package? How much more would you spend for a clean home initiative, where you have sanitization and the air quality and things like that. So I think that this has, it hasn't kind of brought in new things. I think it's accelerated and really put at the forefront our needs to adapt and do things quickly and respond quickly to this ever-changing market. And I think it's a good thing. It's kind of keeping us on our toes.
Yeah, I think it definitely is. And you were spot on with a couple of the headwinds that we're seeing. We're seeing permit delays in Dallas that we've been working on. You've seen me try to write about that. I love seeing the optimism of these poll results that 62% of you feel like year over year you're better than last year. In March, there was no way I was going to expect that was going to happen. We were just trying to keep the industry open and operating. And I know we have some challenges now and going into the new year, but I think in residential in this industry, we are as well suited as we possibly can be comparatively to other parts of our economy. So any closing thoughts on that page? And I've got a couple of things that I'll add for the audience as we close here.
I'm debating on whether or not to bring this up. I mean, I think the Dallas-Fort Worth is definitely the place to be. I will say that, me, I'm always out to challenge everybody and to look at things differently. Kind of my latest thing that I am really kind of pounding my chest on is inclusivity, as far as us, how we are not only doing things from hiring practices, but also from home building practices. And I know you haven't asked that directly, but I think it's something to bring up, especially in light of everything that we're seeing. And the reason why I bring it up is not only because it's obviously at the forefront of what we're all talking about right now, but I do think that we are behind the 8 ball as far as making sure that we are building for all races and ethnicities. And what I mean by that is not just putting a picture of, multicultural family in your advertising, right? It's really understanding. It's about being uncomfortable. It's about really trying to understand who your buyers are. And I think in Dallas and in Texas, this is no better place to do it. Our Hispanic population is going to be outpacing all other ethnicities probably in the next few years. So from a kind of where we're headed, I think we have a huge opportunity to really understand who our home buyers are. And that's really something I've never, gotten away from, which is really know who your buyers are, know where we're going, and know what we can do as an industry to be better.
I think couldn't have said it better and couldn't agree more, because you've seen, and a lot of our messaging is shifted to the need for inclusivity and the fact that we can't ignore the long history that we've had here in the South and in Texas on exclusionary zoning, and some of that lives on with the regulations that are there, with the artificial prices that we're seeing, being increased, in places like Heath and others that, just do things because it's more about who they want to have live there instead of what they want the homes to look like. And we're just going to have to put that on the surface, but also it's not a pricing thing, it's an understanding issue. And I think the more we can listen, the better we can benefit, for sure. So I think that's point well taken for everybody here, and something we're working on at the association to hone our ears and our minds towards. Again, appreciate Paige and everybody as far as our panel goes being on this. We do have a CAPS class coming up, Certified Aging in Place Specialist designation, September 16th through 18th. That's another growing segment of our population that we need to build for and make sure that they can age in place. I think that takes a higher priority now, given the horrible things that we've seen happen when the virus has gotten into nursing homes. So there's a lot of interest and demand in that there. Sheena will send you some information on that. And then a lot of you have asked me, hey, what's the Dallas BA going to do in terms of going, try to have some meetings in person and try to, have maybe a hybrid approach. And I'm looking at that. We're looking at the same things that you guys are, and we're trying to do what's prudent there. I'm going to have Sheena ask just a question from everybody here in terms of what is your comfort level with having meetings and gatherings in person, because I think that's going to kind of help us figure out what the next steps are and what the association does going forward. So take a couple minutes to answer that. And again, I appreciate you all taking a couple hours to jump on the 2020 State of the Industry Summit. Thank you very, very much to StrucSure Home Warranty and James Hardie Building Materials for being a big part of our association and the title partners for the State of the Industry Summit, as well as everybody who spent their time here today. I'm here and available, as is our staff, for any questions or anything that you need going forward. And I hope, as Justin said at the outset, that you'll help us grow the association to our 1,100 goal that we're looking for this month. And that'll strengthen our voice and allow us to overcome these challenges that lay ahead. So again, thank you for being a part of the Dallas BA. Thank you for tuning in with us this morning. And I hope you have a good rest of the day and a great, safe Labor Day holiday.